Good morning, gang. Good morning. Welcome back to this week's Bitcoin update. First and foremost, remember nothing discussed today is financial advice. It's just for educational purposes only. And now that's out of the way, let's jump into the Bitcoin chart, shall we? And talk through some zero fluff, zero BS TA that you guys are all here for. Okay. So what we're going to do, as usual, we're going to talk through the trades over the past week that we've had in the group and publicly as well on YouTube, and then we will start to discuss what we're looking for next. So obviously running through last week's trades so you guys can learn, understand where and why we're looking to trade. First, we will start off on the public trade that we gave you last week. So as we were recording this video, last week's YouTube, again, you can go watch it. We were hovering around here, making our way to the upside. Okay, in the end, what I was looking for, one of the three options that I gave you, and again, I'm not going to sit here and I'm not going to BS you and say exactly as predicted, because I did give you three different scenarios, okay? And this is how a trader works. An influencer will give you one scenario because they don't understand how to look at the market, and that's why they're wrong most of the time. But a trader will give you multiple different scenarios because it's if this, then that, okay? So, in this instance, if swing failure pattern of this high, then short. Okay, so you caught the short trigger. Okay, in the end, lovely trade. No reaction on the way down. We did have a few SR levels on the way down, a few levels of support, but again, nothing held, and we just tanked straight down. So if you caught that trade, well done. You know, you could have bagged yourself, loosely speaking, around an 8-hour trade. So what does that mean? Well, it means that if you were risking $100 in your stop loss, so if you got stopped out, you lost $100. But if you won, then you got $800, okay? So if you took that trade as a one trade all week, because you were waiting for it, then well done. Great trade. Now on to the next. Okay. So very simple setup in this. Okay. At the high, we saw the breakout traders coming in. We saw fresh longs coming in. But again, the volume, it just wasn't there. It wasn't there, which is why we ended up turning around and dropping back down. So I bang on about this time and time again. Again, a little mini rant is influencers. Okay, and the kids that try to teach you how to trade will tell you to get bullish at range highs. Okay, and they'll say that if it breaks out, then I'm looking for longs. And once again, if it breaks down, I'm looking for shorts. Okay, so if it comes out of this, I'm looking to short it. Well, you got stopped. If it breaks out, I'm looking to long it. Oh, you got stopped. But if you flipped your mentality and actually understood how to trade, then at range highs, the only things that you're looking for at these range highs is you're either A, looking to take profit on your longs, and or B, looking for shorts if you've given the setup. Just like at range lows, you're looking to take profits on your shorts and or look for longs. Okay, it's very simple. It's very simple. It's not rocket science. Flip your mentality. You don't look for shorts into support, just like you don't look for longs into resistance. Okay, when we're in a sideways market, and we've been in a sideways market ever since 69k, sideways and down, that means we've got prior levels of resistance above us, which means we are in a sideways market. Yes, it could slowly grind up and go sideways, slowly grind up and go sideways. Okay, but these are the places where people get chopped up. Okay, so instead of long in here, long in here, and long in here, and getting stopped out, short in here, short in here, short in here, and short in here, and getting stopped out, and then eventually you get your one winner that runs up to the next range. Okay? Well, this winner needs to run a hell of a lot longer to make back all the losses that you've just made in this range by trying to trade the breakout. Okay? Rather than doing the opposite of what everyone else does and looking for shorts at the highs and looking for longs at the lows. Okay? It's just a range. It's just a range. Okay, so if you got that setup, hit that like button, and well done. Well done, that. Good trade. Now, coming into Friday's plans, we got the trade we were looking for. Well played to anyone that caught it. Talking about the short from the highs. Now, a lot of the guys in the group, because they understand how to trade, did excellent. So we've had some amazing trades over the past couple of weeks. So, well played to these guys. Now, I'm coming into the group on Friday morning and I'm giving the plan. Okay, so for fresh shorts, I'm not interested unless we're coming up into this resistance zone here. Okay, now we didn't actually come up into this resistance zone until the following week. So that's absolutely fine. Now, I'm saying at the time, and you can see here again, very transparent. I'll show you my notes. If the algo pocket doesn't hold, which is referring to this pocket here between the 618 and the 786, okay, then I'll be looking for the overall highs again. So coming up here, and again, potentially looking at another swing failure pattern. Okay, now for longs, currently stalled at the local golden pocket, remain above the daily open, and there's a chance for a small bounce. Okay, so what do I mean by this? Well, we're currently stalled at the golden pocket, above the daily open, and as long as we remain above the daily open, then there's a chance for a bounce. Now, in the end, what did we get? Well, we got the bounce, okay? And where did it end up turning around? The 30.8k, okay? So if you caught that trade, well done. Now, once again, you wouldn't have held that all the way up here because we did have resistance in between. But either way, good trade. It's a winning trade regardless. And once the take profit once hit, it's a risk-free trade because you move your stops to entry. Okay? So then the weekend plays out. Now, on the weekend, let's get rid of this. On the weekend, I don't trade the weekend personally unless I get a high time frame set up. Okay, so that's a swing trade basically. Because I prefer to spend the time on the weekend with my young family, my little boy and my wife. Okay, but for anyone trading the weekend, and again, if you're working through the week and you're trying to become a trader and you're trying to build up your experience, then yeah, great, trade a weekend. You got sideways price action. People think that you can't trade a weekend price action, but at the end of the day, you can see here, it's clear as day. You got a sideways range for the weekend. Absolute bread and butter for trading. Okay, great place to learn. Okay. Anyone that's practicing over a weekend because they can't trade through the week because they've got work commitments or family commitments, utmost respect. Utmost respect. All the guys in our group that are studying the content day in, day out, spending every hour under the sun that they've got free to learn, great. Okay? Great weekend range to trade. I'm then coming into the Discord on the Sunday night. I was giving my thoughts on Sunday night. Because we'd had a range-bound environment over the weekend, quite simply, I was either looking for take the weekend highs or take the weekend lows. Okay, whichever happens first, you get your trigger. Now, in the end, the weekend lows were taken bang on midnight between Sunday and Monday. Okay, we had a small bounce, and then we came back into the golden pocket. There's your entry trigger. If you didn't catch this initial swing failure pattern, there's your safer entry trigger back into the golden pocket, and in the end, we traded it to the other side of the range, the weekend range. Okay, so in the end, 3-hour trade. If you did hold on to it a little bit longer, maybe it's a take profit 1, and then back up into that 30.8k region, great, take profit 2. But either way, 3-hour trade. So therefore, if you risked $100, once again, then you got a $300 return. Okay? If you risked $1,000, you got a $3,000 return. Okay? Very straightforward. It's not difficult, isn't this? And you can see there's not even much other TA on the chart for this, because a weekend play moving into a Monday is quite good as long as you've got the right setup in place. Okay, that then leads us into Monday. Now, Monday, obviously, the trade from the lows coming up. And to the weekend lows, initial bounce, good. Well played if you caught it. Now, on the way up, we did have 2 other SR levels within this, which in the end didn't cause any reaction at all. Price just carried on straight through it. So what I'm saying to my team is the only volume resistance we've got up here is this zone here. Okay? So we had the golden pocket here, which I was interested in, but I'm more interested in the last bit of volume that's up here. Now, some people will refer to this as an order block. Some people will refer to this as a supply zone, demand zone, whatever you want to call it. I don't care what type of TA you trade. Okay? At the end of the day, it all points to the same thing. You've got sideways price action here. Therefore, within this, you've got some volume. Okay? Not a significant amount of volume, but it's the last bit of volume. If this doesn't hold price down, then I'll be looking for higher prices. Okay? Now, in the end, it did hold price down. Okay? In here, within the algo pocket, give the reaction. Now, you could have zoomed into a 1-minute time frame on this one, or even a 3-minute time frame, regardless. And you can see here, after the initial reaction, you're not trying to catch the absolute highs, by the way. Okay? Initial reaction, came down, we came back up. We can see this. This is on a 3-minute chart. And what happened in this? Initial high, good reaction, came down to the low, move this sideways into the golden pocket. There's your entry trigger. Okay? There's your entry trigger. This is the hardest part about trading. Okay? Planning out technical analysis, knowing where you want to take a trade is one thing. Being able to figure out how to execute that trade is the next thing. That's the hard part. Okay? So in the end, we got that level, got that trade, and in the end, we had no reaction on the way down. It just cascaded down. Okay? Cascaded down. So in the end, you got a nice 4.5 hour roughly trade out of that. Again, no reaction, take profit at the lows, winner. Great. So again, if you're risking $100, you got $450 return. Okay, it's not that difficult. Okay, it's not that difficult, especially when you've got my trading plans every single day coming into the group. So you're not copying my signals because they're not signals. Okay, you're formulating your own plan, but you're seeing where I'm interested in taking a trade. So when price comes into the region, my areas of interest where I'm looking to take a trade, then you know that if price comes into there, then you can yourself look for reasons to get involved. If you don't get your setup criteria, you don't have a trade. It's as simple as that. Okay, I'm not saying that every single one of our members will have taken every single one of our trades this week, because time zones will have made a difference. Entry criteria would have made a difference. Okay, the guys understand how to trade because I've taught them. Okay, so obviously if you guys want access to these trading plans, okay, to understand where I'm looking to trade, then come over to our website, spitfiretraders.com. There's a link down in the description. When you sign up, which will cost you the grand old price of 75 USD or 60 Great British pounds, then you'll get access to the daily trading plans, but you will also get access to our educational library, which is all this. All this. So not only will you get access to weekly streams where we show where I'm looking to trade, swing trades and intraday trades, map it all out in front of you, do the technical analysis in front of you so you can see where I'm looking to take trades. We've also got the live action events. We've got basic introductions. We've got range trading strategies. We've got Fibonacci. We've got patterns. We've got order flow, Elliott wave, entering and managing trades. Again, I refer back to what I've just talked about on the charts where I was saying that planning out your TA is quite easy. Okay, learning TA is very simple. It's like learning any other skill. It's like learning basic maths. It's like learning a language. Once you understand it, very simple. The hard part then is when it comes to actually entering and managing your trades. Okay, so we've got 3 videos within this. Okay, Elliott wave, psychology, how to build your own strategies from all the tools that I teach. Okay, Forex. We've just started the Forex modules. Okay, you know, when the crypto market's going sideways and it's a little bit boring and you've not got any decent setup criteria, then you can always look at traditional markets. You know, traditional markets move a lot slower, but they often have a hell of a lot more setups. So what I'm doing is I'm teaching the guys how to use these tools and apply them to the Forex market with the subtle differences that you need. Okay, because there are subtle differences. That's mainly because the FX and traditional markets are highly liquid compared to crypto, which is highly illiquid. Okay, which is why we get all the scam wicks, etc., etc., etc. So there's not as much volume, which is why you get less of that on traditional markets. So once again, if you want access to all this, it'll cost you the grand old price of 60 Great British pounds for the daily trading plans, the private Discord, so you can discuss your TA with other members, learn along, and all the educational content. Okay, so that's that. So next, what we're going to look at is what I'm looking for next. Before we jump into this, quick shout from today's video sponsor, BingX. If you don't know who BingX is, BingX are a crypto exchange where you can not only trade crypto, but you can also trade FX, commodities, indices, and stocks. And the beauty of these guys is you can use your crypto as collateral. So if you want to deposit USDT or Bitcoin, for example, then you can use that then to trade Forex pairs. So if you want to trade the pound against the dollar, or you want to trade the euro against the dollar, or the S&P 500 or the NASDAQ, you can. And you can use that crypto as your collateral. Okay. So big shout out to these guys. If you do use our link, then you can get access to some deposit bonuses and some trading related bonuses. And a side note is they are a non-KYC exchange. So if you do live in a country where you can't trade on other exchanges like Bybit, then these guys are an option because it's non-KYC. Okay, so now that's out of the way. What are we looking for next? Well, quite simply, the same as what we've been looking for a long time. Okay, so we have the top range. We have okay, and then we have the range above us. Okay, now the 3 ranges that you need to be aware of. The only 3 ranges you need to be aware of. You can, if you're a low time frame trader like we've been having this week, you do have obviously the low time frame range here. Okay, absolutely fine. In fact, we'll leave this on. Let's just shorten this down and we'll change the color. So low time frame range. Okay, This is all you need to be aware of right now. So we're zooming to the 4-hour chart, shall we? Okay, we can see here what's going on. If we come up again and we come up to these highs again, then first and foremost, what we can look out for is another SFP. Do we get another SFP of these highs? Okay, if we do, great, you've got another short trigger. Okay, if not, if it does take these highs and continues up, then the next thing we've got to be aware of is the next range above us. Okay, so within this zone is a no trade zone for me unless we get some sort of failed rally, which that means we start coming up, don't quite make it, then we start rolling over. Okay, then you've got your trade setup. Okay, then you're looking back down towards the range highs. Okay, do we get acceptance back into that range and does it carry on rolling over? Great, you let it run. If not, then you look to take profits and then you look for long triggers. Okay, so within this zone here, it's effectively no trade zone unless you start to see significant weakness. Again, that's what you want to see. You're not front running it. If it does start to pump up through this level, don't start shorting every time it pauses. Okay, you want to see a clear sign of weakness. Clear sign of weakness before you're looking to get any short trades within that. Otherwise, just like what happened up here, everyone was shorting all the way up from range lows towards range highs, and they were just getting stopped out because there was no reactions. There was no sign of weakness. There was only that one sign of weakness within this, but it didn't even follow through. It didn't change market structure. So therefore, low time frame, you could have got in, but you'd have been stopped out. And I did exactly that. Absolutely fine, because that was the only time it stalled. So up here, don't go blindly shorting. Okay? Unless you've got a reason to do so. So, if it does go higher, zoom out. Hit this. If it does go higher, and we do manage to get up here, then first and foremost, do we get acceptance back into this old range? Okay? If we get acceptance back into this old range, great, cool, then you trade in this old range. With a key emphasis on this zone here. Okay? This is between 38 and 40k. Key zone here. And why is that a key zone? Well, that's because it's a point of control. Okay? The point of control from this whole range. Point of control. Okay? That's coming in roughly, call it 39k for easy numbers. So there's a key emphasis on that. Okay? If that doesn't cause a reaction, quite simply, you just trade in this whole range. Okay? Trade that until it breaks. You're looking for shorts at the highs, you're looking for longs at the lows. Now, what happens if we don't get above there? Okay? Well, what happens if this just starts to roll over? Well, it just starts to roll over. Let's zoom back into the 4-hour chart. This starts to roll over. Bear in mind right now, we're at range EQ. Okay? If this does start to roll over, then we're looking back down at range lows. Okay? These are the local range lows. Small time frame. Do this hold or not? If this doesn't hold, then looking down at this EQ, first and foremost, however, it's thin. So if you get no reaction there, then ultimately I'm looking for range lows. And again, zooming out, all you're doing is trading. Let's just hide the green one. Let's hide this. You're just trading this range. Okay? Trade that range until it breaks. If it does break to the downside, starts coming down here, then we're looking, see if it gets acceptance back into the macro range, the old macro range. If it does, then we just trade in this old range. Okay? Or if it does get a reaction here, then you're looking for longs. Just like at the range lows, if it does come down here, okay, it does roll over and come down here, but you get a good reaction here, change your market structure, people selling range lows, just like people buy into range highs because they ain't got a clue how to trade, then you've got yourself a long trigger. Okay, and we just keep trading the range. It's very simple, okay? So to the upside, either looking for another swing failure pattern or genuine breakout to the upside. To the downside, these local range lows, roughly around 29.5. If that doesn't hold, then EQ range low. Okay, is that clear? If that's clear, hit that like button. Let us know down in the comments. If you're not subscribed, consider subscribing and consider hitting that bell notification so you don't miss an update, like for example last week's trade setup that we gave you. Bang on time. Okay, and until next time, gang, as you were.